All right. Welcome back. Welcome back to another episode of Take Profit Tuesdays. As always, this is your host, Levon Stewart, CEO. And in today's episode live stream, we're going to talk about a couple things. And again, if this is your first time watching the stream, this is Vanya FX, where we educate the masses how to invest, how to learn how to make profits in the market. Again, this is not financial advice. If you are not able to master the four pillars, the pillars that all of us who are, experienced investors have, then you should seek an advisor. If you can't withstand the markets, you should see an advisor, a licensed advisor, someone who can help with your funds. Because again, if you haven't seen the previous videos, we focus on the four pillars: capital, strategy, risk management, and psychology. And with these, you can become a successful trader. But again, if you're joining, like, subscribe, hit the notification bell, and let's keep going. All right, so let's jump right into it. So, as far as most recent updates from last week, guys, I thought the market was gonna take a bigger dip. I really did. I was actually hoping it would take a bigger dip. Oh, Levon, why would you want the market to take another dip after it's been dipping since? Well, if you watched that video last week, I said if it did dip, if it goes sideways, if it go either way, I'm gonna be perfectly fine because again, I've mastered the four pillars. So if it dipped, I said to myself, okay, fine. If it dips, consolidates a little bit more, I'm gonna buy it at a cheaper price. Price tends to goes up, people are gonna rush in to buy it at a cheaper price. And again, if this is your first time watching, these price tags also where I bought in. We talked about in previous videos. Right now we're kind of back where we started at the third position that we took. Now, would I take another one? Like I said, guys, it's a waiting game. For all we know, it could take another big dip. Today we actually had a somewhat negative day. We ended last week at a positive. Last Friday as a positive, back into that zone. It could continue to go up, and I'll show you real quick what potential we could see. It could break out retest, and possibly consolidate as you go up into that other zone. But again, guys, I don't know. To tell you the truth, I want to jump in again. I really do. But if you were someone who were able to get in at the time where I was hesitant to even get in at the low, hey, you're in profit now. All right, we talked about this, guys. How when we trade together, we call me money together. And I told you, I'm holding this long term, couple years. I don't know. We'll see. We're doing this episodes every week, right? You need to have, like I said, the four pillars of strategy. What is your strategy? I've explained to you, this is one of my strategies that we're going to work on together. This is long term, guys. And to be honest with you, if we grow this account size big enough, we could talk about option trading, right? So again, support the channel, like, subscribe, hit that noty bell, and let's keep going. Let's pull up the account while we're on the live stream. All right, and again, guys, we don't cap on this channel. We don't lie. I'm gonna tell you the percentage, and maybe if I feel like, I'll tell you the amount. We'll see how we're doing. Let's give it a second. Got the app open. All right, so we're only. Let's see. That's really good actually. We're down $2 and only down 3%. I believe last week. Let's pull it up on this nice Robinhood app. Last week we were down $6, almost 8%. So guys, that's why I said we do things long term. Long term. Got a lot to go through. Got a lot to go to. And again, the SPY it gives me dividends, so I think that's every quarter or so. But like I said, I'm holding this for like the long term play, not a rush or anything like that. So we gotta take it day by day kind of thing. All right. 1 second. So now, Lee, what's going on in the news? Oh, perfect. I actually pulled some up. But anyway, before I even talk about that, I do want to go over one trade we did last week, or this week actually, that went to negative. And I feel, and again, we only do 1% per trade. Oh, here it is, GJ. So with GJ now, GDP British pound versus the yen, it was in a zone. Let's see if I can back it up. And I'll do a replay. Again, guys, this might be a little bit short to long stream. We're going to play it out. So I believe this is where I saw it. And being that it broke the zone, came back down, I thought it was going to continue to go down. So as I'll let this play out for a little bit. Came back down again, it double rejected. And I thought, okay, perfect. This would be a nice zone to take, or nice suppositions to take. Indecision a little bit, kind of was expected. Came up a little bit. Again, I mastered the 4 pillars, so even if this trade took a loss, it'd be a very small loss. I normally do 1 to 3% per trade. So if I'm doing 1 to 3%, I could take multiple trades and not have to be worried about my whole account being wiped out. And when it is a good trade now, it's going to be a very, very good trade. And then at the next day, hit the stop loss, so on and so forth. So again, guys, we're very transparent. This is one of many trades I've sent to the group. But yeah, we're building, we're learning. This happens. Again, we teach you all the 4 pillars. So if you ever take on a trade that isn't a loss, this will happen. We're being very transparent about what we do. And again, this is just one of many. We do crypto, stocks, soon to be bonds, and yeah, it's a whole bunch of things. All right, so let's talk about the news. What's going on in the news, right? Fundamentals, guys, fundamentals. So this is one article I pulled up. Stock market news, live updates. Stock market closed out volatile month lower after rally loses steam. Right. Shout out to Alexandra Semenova. Probably just read the first 3 paragraphs or so. U.S. stocks capped a turbulent month of May lower on Tuesday after a really rally late last week failed to sustain momentum. The S&P fell 0.6% in a choppy session, while Dow Jones Industrial Average shedded 22 points, so on and so forth. Right? These moves come after all 3 indexes logged weekly gains more than that amount, clawing from 7 consistent losing weeks. So that's very significant. 7 consistent losing weeks, that's a very perfect buy opportunity. And so on and so forth, may mark another volatile month for equity markets as concerns over inflation and interest rates hikes. So there's a lot of concerns over inflation and interest rate. So again, guys, think about it. Why people selling off their stocks? Concerns of inflation. Why is the Feds? How are the Feds gonna combat this inflation? Rate hikes. What does rate hikes affect? The lending power, right? The being able to borrow at reasonable rates. If you're gonna borrow more, let's say buy a house or take out a personal loan, and rates are getting higher, you don't want to be paying a lot of interest on those rates. But if you're doing now, hey, guess what? You're helping the economy boost up and you're helping reduce inflation. Thus, then being that once that money's out of circulation, prices and goods could go down because there's not as much supply, so demand has to go down, right? So on and so forth. All right, next paragraph, or article, I should say. Um, Stocks. We have reached peak bearish admin recession and Fed fear, City says. And this is by Brian Susie. Shout out to him. Again, we'll probably read a couple paragraphs, not too much. Again, we're going to try to keep it a short stream today. After a couple of days of strength in stocks, one Wall Street investment bank thinks the worst is behind investors for now. And I do kind of believe the same thing too. Because again, guys, let's go back to the S&P because that's the only one really looking at, to be honest with you. If we were to look at the S&P on a monthly time frame, we've been having almost 1, 2, 3, almost 4 baddish months of bears. So one could only assume that this is a perfect opportunity to buy in. Oh, Lee, why is it a good opportunity to buy? Because again, people are gonna buy when the market is at the lowest, right? I hope you didn't buy at the top when things were going up. You should have waited till things got lower and cheaper. And guess what, guys? This will happen again in the future, right? I don't know when. But hey, let's keep going. Over the near term, our high level takeaways that equity markets have reached peak bursts related to Fed expectation and recession risk. City strategist Scott Chardner wrote in a new note to clients. From here, we suspect that volatility will move more down the single stock path, meaning if you're buying individual stocks, whereas if you're buying the S&P indexes or so forth, it's a basket of stocks and equities and things of that nature. It has more diversification to withstand these kind of volatile movements. But I continue with the Q2 reporting period approaching. We expect to see more evidence of this, right? So I just want to probably just finish off with this one, or these two, I should say. Chorner listed several factors behind his call, most related to market sentiment hitting extreme pessimism. Guys, what does that mean? When there's a lot of fear or greed in the markets, that's the best time to make money. When people are fearful, you get greedy. When people are greedy, you get fearful. To the opposite, meaning if the market is dipping, you better be buying. And when the market is rising, you better be prepared to sell before basically just do the inverse. But again, guys, it's not financial advice. Again, if you're not withstand the markets, if you can't handle this kind of information, seek an advisor. And put it into his hands, pay that commission. But anyways, back to the channel. Again, like, subscribe, hit that noti bell. All right, let's keep going. CFTC futures options positioning data shows that asset manager net worth length is near a 10-year low when we normalize not nationals by aggregate market caps or gross exposure. The note stated, leveraged fund positioning contract. This as a group appears to have taken profits on shorts in the recent weeks. Guys, that means what? These leverage funds are shorting the market, right? They're betting on the market dropping, which then hence will make the market drop even lower. And they've already taken the profits, meaning they sold the position, right? So if they sold the position, that means the bears are gone. They're not shorting anymore. That means these funds are going to start buying it now, right? Let's continue. Retail speculation has declined. So that means people like you and me, we're not really in the market as much or speculating as much as buying as much because, things are really low and, as normal people, we're uncertain. The sharp underperformance of social sentiment stocks, non-earning names, and other more speculative trades basically was hinting at this already. But TRF trading data helps confirm high risk speculation is working its way out of the markets. So that means they're expecting buyers to come in, right? And this is a lot to take away, guys. Again, if you have to watch this video a couple more times, just grasp what I'm saying, just to understand. Again, you know where to reach me. Hit me up on the channel comments, or on the other channel, the reacts. You know, all my socials there as well. So, let's continue. So I do want to look at the commitment of traders. And just really quickly, let's look at the commercial, non-commercial, as far as whether they're buying or shorting the dollar. Again, guys, you have to take into fact the Euro USD. Oh yeah, let's even look at how the dollar is doing, because it's been a while since we talked about the dollar. So, hand claps to the Feds. Their job is doing good. The value of the dollar is decreasing. Hence, inflation should follow up suit after. Um, but yeah, we should be expecting a lot of people to be buying euro. And the value is gonna be devaluing, right? So, as far as the euros, we have over 200,000 for the long positions for commercials. No, significantly less than that. Non-commercial, excuse me. That means retail traders, and a lot of commercial traders actually going short. So they probably still expect it to go down. Fair enough. We'll see what the Fed say about that. But overall, there's an overall short position. But these are not always determining factors. You always have to keep in mind what's actually going on in the markets. This might change in the next couple of weeks or 2 months. Actually, let's see when this was updated, as of the 24th, which was probably last week. So it needs an update or two. So that might change in the next couple of weeks or so. We don't know, guys, but we'll definitely cover it in the next couple episodes or so. And again, guys, if you're just joining in, I'm about to end the stream. Make sure you like the video, comment, subscribe. Tell me what you guys think. Show me your ideas if you guys want me to go over a particular stock. Kind of go deep dive into it. If you want to understand certain things, reach me out. But yeah, I'm gonna catch you guys on the flip side. Peace.